What is going on, everyone? Hope you all are doing well. And in this video, I'm going to share what I'm going to be looking for during Cleanspark's upcoming earnings report and conference call. I've talked about this company several times on my channel, and with earnings coming up, I think it's a great time to share what I'm going to be looking for, both the caution flags and the improvements that I want to see from this company, especially given these turbulent times. But I don't want to waste your time, so let's go ahead and dive right in. So for those of you that don't know, Cleanspark is a Bitcoin mining company who uses their knowledge of energy management to mine Bitcoin with clean energy for a low cost. They have 2 owned and operating facilities in Atlanta, Georgia, and they co-locate miners in New York, which basically means they use the facility to mine Bitcoins using their miners. Now, the benefit of having your own facilities is that you will be able to mine Bitcoin for a cheaper price. And because they own the facility, they get to choose what kind of energy they want to use to mine Bitcoin. The co-location in New York allows them to mine more quickly, because if they run out of space at personally owned locations, they will have to buy a new facility before they can get them up and running. This gives them the ability to just plug in their miners and go. Cleanspark's goal and vision is to be a top 5 North American Bitcoin miner in the following categories: hash rate, which is the computing power and helps determine how many Bitcoins are mined; efficiency, sustainability, and profitability, which includes revenue, net income, and adjusted EBITDA. Now, being top 5 doesn't sound like the best, but I like to compare this to sports. If you were ranked in the top 5 in offense and defense, more than likely you are one of the top, if not the top team in the world. And I believe the same applies with Cleanspark. Honestly, there are several other Bitcoin mining companies that mine more Bitcoin than Cleanspark, and this could continue. However, these companies probably don't have the kind of efficiency and sustainability that Cleanspark does. How I look at this is that if Cleanspark is already one of the most efficient and sustainable Bitcoin mining companies, they can put almost all of their attention to growing more miners without losing their recognition for efficiency. Some of these other companies have a ton of miners, but if the government needs the company to be more sustainable, they will then need to improve sustainability for their current miners and the miners that they end up buying. Cleanspark already has the framework to succeed, which is why I like their growth potential moving forward. Let's talk about the actual numbers. So this quarter, I believe, is going to be a really confusing quarter for a variety of reasons. First, Cleanspark has improved their hash rate from 2.4 exahash to 2.8 exahash at the quarter end. And even though this is great to see hash rate improvements, the drop of Bitcoin prices will probably make this quarter look bad. In the first 3 months of the year, they mined 898 Bitcoin. And these previous 3 months, they mined a total of 964 Bitcoin. But in the past 6 months, Bitcoin prices have been cut in half. So the revenue is not going to be like it was in the first 3 months of the year. So this is important to keep in mind. I'm expecting revenues to be around $35 million, which is still about triple the previous year. And that was when Bitcoin prices averaged about twice where they are right now. So compared to last quarter, it is not going to look good. But I think when we look at how far they have come from the last year, this is really good improvement. And if Bitcoin prices were around the same as last year, they would have 5x their revenues. Analysts have them doing about $36 million in revenue, so we will see if they are able to meet or even beat estimates. Now, part of their business was their microgrid segment, but during their June Bitcoin production report, they announced that they achieved the important milestone last month of exiting the switchgear business. So we may see some revenue from this business because of April and May, but I doubt it really being a factor in this upcoming quarterly report. But another aspect that is going to be confusing is how their profits have been negatively impacted by the drop in Bitcoin price. With Cleanspark generating a negative net income this past quarter, I wouldn't doubt seeing this again, but much worse. They admitted last quarter that the reason for the net loss was because of decreasing Bitcoin prices. Analysts have them losing 8 cents a share, and I honestly think it is going to be much lower, maybe somewhere closer to 15 to 20 cents a share. The reason for this is because Bitcoin mining companies are required to report realized losses even if they don't sell their Bitcoin. Now, Cleanspark can mine a Bitcoin at about $11,500, which could be 50% margins at current Bitcoin pricing. But when you include the loss that they had to take because of the Bitcoin price drop, you need to add that loss to the amount it costs to mine a Bitcoin to get the total expense to mine that Bitcoin. And that means that the margins are going to be lower than 50%. And so when you consider this margin reduction compared to the past, I think that they will still have a decent sized loss. But honestly, I don't care as much about the net income as I do adjusted EBITDA, or earnings before interest, taxes, depreciation, and amortization. Cleanspark last quarter reported positive adjusted EBITDA of $22.5 million. Now, I'm not expecting the same thing this quarter, but I would like to see this number close to break even. I wouldn't be surprised if it was negative because of the Bitcoin price fall, but I think that they could still be close to break even. But if I'm honest, I'm not really worried too much about their earnings in the future. I think that this quarter's earnings will look like a setback. However, I don't think that this is how we as investors should look at this company or even this industry. I think what this earnings report is actually going to show is how the Bitcoin mining companies do when Bitcoin prices are significantly affected like we have recently seen. If they miss analyst numbers, I don't care about the short term, but it will give me a better idea of what to expect if either we remain in this crypto winter and don't see an increase in Bitcoin prices, or if we see another major price drop in Bitcoin in the future. And unless Cleanspark says something crazy during their earnings report, I'm not going to be selling shares or asking myself why I bought this company. But here is where I want to warn people who are invested in the Bitcoin mining companies. I believe that this past year has proven that we cannot expect Bitcoin to always move up and to the right. And what I've continued to see people say is that Bitcoin is going to reach 100K in the next year or so. The problem for several investors is that they're basing their estimates about Bitcoin performing well. But what if it remains around 20 to 30K for the next year? What would the growth look like for the company at that point? Would that throw a wrench in your projections? Whether we like it or not, Bitcoin is not used by everyone on a regular basis. And until we see it more in the real world, I think we have to identify that this is not only a risky asset, but a risky stock as well. Now, don't get me wrong, I am bullish on Bitcoin for the long term, but I also need to be real with myself and understand that with the current economy and the issues that are going on in the crypto world, it may take some time to get back to all-time highs. Although these problems could lead to more regulation, which could be good for the Bitcoin price. However, personally, I would rather be conservative with my Bitcoin estimates and be pleasantly surprised than have projections extremely high and be severely disappointed. The next thing that I will be paying attention to that I think is important is an update on their projected hash rate for the end of the year. They're expecting to have 4 exahash by the end of this year. And so I want to at least see them maintain and hopefully increase their hash rate guidance. I do believe that they can grow significantly past 4 exahash in the year, but we will see what the management team has to say about that. Now, I doubt that this is on the horizon, but I also want to see if the company is thinking about diluting shareholders in the near future. One thing that the Cleanspark team has said is that there are 3 levers for financing their business. There is debt, dilution, and selling Bitcoin. Currently, they have chosen to get financing by debt and selling their Bitcoin, as these are the 2 lowest costs in their opinion. However, with debt starting to dry up with increased interest rates, will Cleanspark have to go to the 3rd lever in order to maintain growing their operations? Personally, I don't think so, but it will be important to see if this is brought up in the conference call. Now, there is one thing from their financing that I am worried about. Earlier in the year, Cleanspark was able to use Bitcoin to pay for their business. However, now that they are mining a tad bit more, but the Bitcoin prices are much less, I'm concerned that they won't be able to use Bitcoin as the primary lever to support their business. Cleanspark doesn't hold a lot of cash on their balance sheet, and so this is something that I will be paying attention to in this upcoming conference call. But with all that said, I still think that Cleanspark's valuation doesn't make any sense. As of their last report in May, they had total assets of $425 million and total liabilities of $24 million, which means that their stockholder equity is $401 million. And what is this stock valued at? $200 million. So unless you see this stock going under, I don't see how someone could justify their current market cap. If we were to look at Riot, for example, they have a hash rate of 4.2 exahash. If we took the amount that they have in Bitcoin and remove it from their market cap and then multiplied it by the hash rate ratio between Cleanspark and Riot, we could see that Cleanspark should be valued just over $600 million. Now, of course, there are other factors involved like the cash on the balance sheet and the amount of growth, but even still, Cleanspark's valuation would still be significantly lower than many of their competitors. And when I consider what Bitcoin mining company has a strong foundation when it comes to renewable energy and profitability to where they can focus on growing hash rate, Cleanspark is easily close to the top of the list if it is not the top. Add that with the fact that they are significantly undervalued in my opinion, and this is a no-brainer for me. Now, we will see if anything changes over the upcoming conference call, but I do not see this earnings report as important unless they miss badly on their earnings or they talk about diluting shareholders. And I personally don't think that's gonna happen. But I hope y'all enjoyed this video, and if you did, smash that like button. It helps more people see this kind of content as well. Also, don't forget to sign up with Moomoo, where you can get up up to 7 to 10 free stocks depending on how much you deposit to the platform. Also, add me on Instagram where I share smaller clips about investing and building wealth. Hope you all enjoy the rest of your week, and I'll see you in the next one.